Well, hello again, everybody, and welcome back to another edition of the Forex Market Preview. I'm your host, Jason Stapleton. I'm here to guide you through next week's trading. We'll see if we can do it. But today I want to talk specifically, I've told you guys a while back that I wanted to stop doing such a, broad cursory overview of a bunch of different stuff and try and narrow it down. And even if the trade doesn't end up being successful, at least you're understanding and learning a little bit more about the methodology. And we do devote some training, some Forex market preview videos specifically to training episodes. But I decided that one of the requests that I got was that I do a little bit more in-depth discussion about some of the stuff that I was looking at. And so one of the things, what I want to do today is I just want to take you through one currency pair. It's something that we discussed in the syndicate. If you're not a syndicate member, I'll put a link underneath the video or probably right here that you can click on to go there if you're interested. But this was something that I walked the syndicate members through in our morning war room meeting that we have every single day at 7:30 Central Time. So every day we come in and I do a live video with them and show them what I'm looking at and what I'm looking to trade. And this was one of the things that we talked about on Friday. And I want to show it to you as well and kind of walk you through that process because it's a good use of both structure analysis as well as Fibonacci and Fibonacci entries, extensions, and retracements. So, sorry. Let's go ahead take a look at the chart here. New Zealand dollar on the daily chart. Now, what you'll notice here is that we've come up into a resistance area, and I actually shorted this earlier in the week and made some money off of it. And again, syndicate members get every single trade that I place using this structure methodology, and that thing ended up going down, ended up making a little bit of money on it. Then the market the next day continued down lower, and I looked left, and we looked at this structure on Friday. And I said, we came down to the hourly chart. So we went from the daily chart, which is kind of a bird's eye view, down to the hourly chart. And we said, okay, now what? What could potentially happen around this zone? And the market was coming down. I think we were right about here at the 7 o'clock candle. That would make sense since I was doing the video at 7 a.m. And we looked left, and we can see the structure level that exists to the left. So the same thing that we're seeing on the daily chart, for those of you guys who are new, the same structure that we see on the daily chart right here, okay? When we drop down to the hourly chart, we get kind of a more detailed view of what that looks like. And as I scroll left and consolidate my chart, you can see that there is that resistance level. And I took a look at that and I said, okay, let's start making some predictions about what we think is going to happen. Number one, the market is going oversold. We're moving into an oversold condition. That should be our first indication that a potential reversal may be setting up. Now, we know on our higher time frame, going back out to the daily chart, that we're bullish. We've broken structure to the upside, we've run into structure on the high side, and now the market is retracing. But we're back up against those structure highs, and we've violated the most previous structure level. So we're still bullish. So as we look on the daily time frame, on the hourly time frame, coming down into this zone looking for a buy would be a bullish move. Now, for the higher time frame. Now, if we're looking at this on the lower time frame or our trading time frame here, we might look to go bearish. But let's assume for the time being, based on our rules using a higher time frame chart, that we're looking to get with the underlying trend, which is bullish. We're going to bring in our Fibonacci retracement. Well, let's see if we can. Now, we know the market is going oversold. Let's see if we can build a case for entry here to get into this market. So we go swing low to swing high, and we're going to draw a Fibonacci level from the last leg of the move. And we can see coming right down into that 50% retracement. That's pretty good. Look left. Let's go ahead and draw in a line here. Where does that 50% retracement come in via structure? Okay, let me fatten this up a bit so you guys can see it a little bit better. Okay, it's right along that structure level, isn't it? Right along that previous double top. The 50% comes right in along that level. Very good. Let's see if we can find a little bit more convincing evidence to go ahead and do that. Let's see if we can find some ratio confluence. We'll grab our Fibonacci extension tool, and we're going to go swing high to swing low here, and then back down in. And we're going to see that, lo and behold, the 1414, one of the minor Fibonacci levels that we watch, came right in along that 50% retracement. And so this became a very good place. I told the traders this is something that we need to watch. We have major structure resistance. We have a 50% retracement and a 1-4-1-4 ratio confluence coming in right at that level. I said aggressive traders can buy up right there. I said that is not a wise decision in my estimation because there's no telling where this market will go. But a better decision is to wait for the market to come up and then potentially come back down into a double bottom situation where we see that bullish divergence on the RSI, and that gives us a nice buying opportunity to look for trend continuation back up into at least 87.30s and maybe new structure highs. And guys, something simple like that, just understanding where structure lies, understanding how to use Fibonacci retracements and extensions to build a case for entry can have a dramatic effect on your trading. And it's difficult in the beginning. It's not easy to learn something new. But one of the things is once you can do this, once you learn the language of the market and once you learn to understand what you're seeing on a chart, you can begin to build a case for entry. And that's one of the things that we do in the syndicate every morning is I try and explain as best I can what it is that I'm trading and why I'm trading it. That way you not only get the benefit of the trades, but also the knowledge and the understanding of what it is that we're doing. So that's the same thing that we talked about there, and I show that to you to give you a little bit of insight into a good trading opportunity. So this is still an opportunity. If we come back down into a double bottom situation here around 86, 83s, that's going to be a nice buying opportunity. We're at the 1618. We're still kind of in that zone. We can kind of draw in a little zone. Our zone was a little bit higher on Friday based on, but once the market has reversed here, now we can identify between the 1618 and the 1414 where our potential reversal zone will likely be. And if the market comes back down into that zone, there's a buying opportunity there. And so we'll wait and see what happens with that. And if that happens well, I won't trade Sunday evening when the market actually opens, but after the London session, if I come in and we're flirting around with that level still, that may be an opportunity. But for those of you who trade London, who trade the Asia session, this might be a very valid trading opportunity for you guys as you come into the new week. Now, let's talk about patterns. Lots of pattern stuff to discuss today. Euro yen on the daily chart. Came off the lows here, 3700s, 3704. That was the cipher pattern completion in orange. Okay, the bat pattern completes a little lower at 3708, about 90 pips lower. I'm sorry, this is 3784s was the entry there, not 3704s. 3784s, about 80 pips lower is 3700s, which is where the bat pattern completes. And this market has had a very nice move from 137.84s to 138.60s, almost about 100 pip move here since that was triggered earlier in the week. Actually, I'm sorry, it triggered at the end of last week. And so what we're looking for on this is a retracement into the 382. So we're looking for a move back up into 140.02s. Now 140.02s just happens to be at previous structure. Look at how beautiful that lines up. Grab my line tool here. Resistance, support. Got some support back here, some support. I think we looked at this last week, and boom, there's that 382 retracement right there at target 1 at 140s. So a nice potential move here. We may come back down. What I'm seeing on the lower time frame charts is that this market looks like it's, and actually even on this chart here, this market looks like it wants to sell off here back down into probably support at 137.80s. But I don't know that for sure. I'm actually behind in this position by about 50 pips. I'm short right now. And this market may come back down in here to 137.80. Again, that was a structure trade, not a pattern trade. So again, based on what you trade, this is why there are buyers and sellers in every market. Because depending on what strategy you trade, one strategy can be telling you to be long, another one telling you to be short. Both of those strategies in the long term can be right. That's the crazy thing, is that I can be right on the short side for right now, and the market may come down in and retest 137.84s. The market may come down all the way down into 137.08 and then rally out of there into a 382 and a 618 retracement, hit targets 1 and targets 2. And the person who is short on a structure trade can be right, and the person who is long on the bat pattern or the cipher pattern can be right as well. What is really important, what's really critical, ladies and gentlemen, is that you follow the plan that you have in place. If you don't follow the plan, if you're constantly jumping strategies, if you're constantly switching systems and switching the rules for what it is that you do, then what ends up happening is that you're constantly losing, you're constantly wandering, you're constantly just frustrated and angry because you can't ever get anything going. But you haven't been consistent with anything long enough to actually see the results. That's why this is so important, that you follow a plan. And again, when Constellation gets released, it's only about 2 weeks away. And the Constellation software, this pattern recognition software, is going to be coming out. And when it comes out, I'm actually going to give you the portfolios that will produce you the nicest return that we found in our historical testing for both the 60-minute time frame and the 15-minute time frame. But guys, it won't mean a lick if you don't trade consistently. It won't mean a lick if you don't follow the plan. So you've got to get that consistency. You've got to get that discipline, and you've got to work on that every single day if you want to achieve the type of success that you're looking for. Let's keep moving on here. Let's look over here at Swissy yen. Swissy yen, we got a couple of different opportunities. This is one of the great things about pattern trading, is that once you can identify the patterns, or i.e. a little plug once you have the software, you can bracket trades. And this is a perfect bracket trade on Swissy yen. You have a potential buy opportunity at 112.38 right there. If the market comes lower, 112.38 is going to be a buy. If the market goes higher, 110.42 is going to be the sell. This is a bat pattern sell. And so when we look at this, now we can look at this trade and say, it doesn't matter what the market does. I don't care. If it goes higher, I know what I'm doing. If it goes lower, I know what I'm doing. No question. And all I have to do now is prepare myself and continue to go back to the chart every day, every hour, every 5 minutes, whatever the time frame is that you're trading on, and make sure that my orders didn't get triggered. And if they did, make sure my stops and my targets are in place, and then manage that trade. I'm very big on systematizing processes so that you spend your time managing portfolios instead of hunting for trades to take and bouncing around from one thing to another. We want to create a portfolio in everything that we teach, whether it's from the Pro Trader course all the way up to the systems that we develop. There's a portfolio there. And we say these are the 4 markets, these are the 6 markets that we're going to be trading because we know the historical performance of these markets. And then what we're going to do is we're going to trade those consistently, and we're going to take every trade inside of there, and we're going to manage the trades inside of our portfolio. It's much, much easier than bouncing around. If we come in one day and there's no trades, well, guess what? We just don't take any trades. But it's extreme. It's so much easier. It's so liberating. It's so refreshing to know what the market's going to do, to have orders bracketed so it doesn't matter what the market does. You're going to be in a position to take advantage and to not really worry because you've got the historical perspective. You know what's happened in the past, and you know if you're just consistent with what you do, that over time it's going to produce you a profit. Now, this is the pound yen daily chart. We actually got stopped out on this trade. This was a setup for a bat pattern that ended up going north on us, and we're now looking for actually a trend continuation out of this. I'm going to be talking about this in the syndicate in the morning on Monday about where I'm going to be looking to get into this trade because this market, like I said, we talked about it last week, and we talked about how there was a definite, this market had done nothing but gone straight up, and so there was some risk involved with taking that basically counter trend short pattern, but the pattern was there, and to keep with consistency, if it's there, we need to trade it. But now that it's been broken and we've been busted out on that, there are opportunities here for structure-based traders to look at getting into this trade for some trend continuation, and we'll talk about that on Monday. The last one is Canada Swissy. We have a nice trade setting up here, a potential sell at, it looks like 83.79, 83.80s. Right there, a nice cipher pattern sell. So again, Assuming that we get short right here, where would we look for those targets? Those targets would be around the 382 retracement. Again, look at how beautiful this works. Guys, we spent a lot of time, we spent years testing these patterns and testing where to take profits off. 382 retracement comes in, look left, at structure, at structure. 618 comes in, at structure. We're a little bit high, but basically in the same general area. There's a reason that we do it the way we do it. The rule set that we use is a lot different than any other rule set that you see. It's much more specific because we find in specificity, in clarity of the rules, we remove subjectivity and we also increase our win percentages. So that's why we do it that way. But anyway, looking for a sell here. There's a potential cipher pattern to the downside here. This actually will redraw on Monday when the market opens back up, or it will go away, assuming that this pattern ends up being not being fulfilled. So this will actually adjust up to account for the change in market direction. So anyway, we'll talk about that next week. We'll see what happens with these trades, but those are the pattern trades that are set up for today as well. Guys, thank you so very much for being here. I hope you enjoyed this edition of the Forex Market Preview. If you did, please hit that like and share button. I would really appreciate it, and leave me a comment. Let me know what you think. I try and respond to them, and I appreciate all of you, especially those of you who have been with me for a long time, but those of you who are new as well. So I will see you back here next week. Until then, good luck and good trading. I'll talk to you soon.